Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, part of Redbud Realty and Associates, and I want to do a brief market update for you today. Today is the day I turn in my information to the Kansas City Federal Reserve for its beige book. I contribute for real estate in Oklahoma City, so I try to watch the trends as much as possible. Now, I'll do a written blog and give a little bit more detail to this, but what I want to do is talk about this in relationship to a previous video I did after the Federal Reserve quit buying treasuries in terms of its stimulus package for the United States to keep interest rates low. Now, there was a lot of dire predictions after that about, oh my God, people are not going to buy treasuries anymore, and nobody wants the dollar, and everybody's going to invest in the euro and the Chinese currency, this and that. And always when you see dire predictions, you kind of want to go, well, wait a minute here. Now, I did predict that things would go up a little bit myself. I mean, it stands to reason if the Federal Reserve's not buying, and really the more treasuries that they buy, the lower the rates are, that we're going to have an uptick. And that's exactly what happened on the 10-year treasury, which is a benchmark for mortgages. We saw the rates going from the 290s up to about 3.17. Not a huge increase, not anything that was going to make a massive change in the interest rate. But certainly there was a little bit of sell-off, and there were, a little bit of kind of hesitancy about buying it. Well, lo and behold, here we are later, about a month or so, I guess, and guess what? The bond is back where it was before, in the 290s. Now, there's a reason for this, is that the United States is still considered, number one, the safe haven. That the safest investment, as long as we don't default on our debt, of course, which I don't believe we will, is the United States Treasury. And that is what's happening right now. There is more confidence in that than there is on anything else on the planet. A second thing is that, of course, on a long-term investment, 10 and 30 years, for instance, in Treasury bonds, inflation is a real enemy. In other words, if you have lower rates like, 2.92, and there's a 3% inflation rate, you get problems. But guess what, folks? We don't have inflation in our system right now. In fact, we have the opposite. We need an economic recovery, and without an economic recovery, we don't have inflation. Now, I realize that some things are fairly obvious to you that, well, what about things like energy and agriculture? Well, yes, there has been some pretty sharp increases, but guess what? Again, supply and demand efforts make changes. Gas prices have come down. People are traveling less. They're not, they're being more conscious about that, so they adjust. Same way with food. And then everything else in that basket that the government measures is not there. So rates are low, and we are still a very confident place to invest. So for the short-term future, and again, I'm not trying to predict out a year to 2 years. Who knows? But if you're looking to the fall, and if you're looking to the winter, at this point, it looks like interest rates are going to stay low, which is good news if you're a home buyer. Now, the second part of the good news for the Oklahoma City market is its economy. As I've talked about before, with 4.5% unemployment, the lowest of all metropolitan areas over 1 million, and also for cities over 1 million, that we have the greatest growth in personal income in the United States. We're looking pretty good, and for the fact that we didn't participate in the bubble, that we didn't have subprime loans here of any consequence, that we're the lowest amount of underwater mortgages in the United States, then we have price stability. One other thing that is adding to price stability right now is that we are seeing inventory levels finally go down. Two things have happened. Number one, if your house didn't sell and you can stay in it, well, you've just taken it off the market. Or number two, if you really do need to sell, then you realize that you need to do a price reduction. Get that price down, get it in a popular area where people are actually buying, and that is going on. So inventory levels in some areas, 10%, in other areas as much as a 20% reduction, and so our supply and demand is stable. So if you're a home buyer right now, you don't have to worry about the fact that in the next 30 days that rates are going to go from 4.5% to 7%. And if you're an investor, then take heart in the fact that we do have price stability, that we can protect your real estate investment, and with the 1% vacancy rate that we're dealing with right now, we're a good place to invest. So this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, giving you a market update, and we deliver traditional real estate values with the speed of technology.